I'm Julie Davis, and I'm a loan officer at US Bank. Today I will review what is a down payment and why do I need one? What is a down payment assistance and how do I qualify? The different types of assistance available, and lastly, mortgage loan programs with or without payment assistance. First, let's talk about your financial investment, also called your down payment in purchasing a home. Like any other large purchase, your lender will require an investment on your part. The amount of your down payment will depend upon the loan program, your credit worthiness, your income, and your current debt. So a down payment is a percentage of your home's purchase price that you pay up front when you close escrow on your home loan. Lenders often look at the down payment amount as your investment in the home. Making a large down payment can reduce your overall interest charges. It can lower your monthly payment and perhaps even score you a better interest rate. On the other hand, making a small down payment can free up more cash for other priorities. Your lender may have specific down payment requirements, so be sure to check ahead of time with your loan officer. Most home buyers believe they need a 20% down payment to purchase a home. Guess what? That is a myth. What percentage down payment are buyers putting down? According to the National Association of Realtors, we can see the percentage by age range. This information can give you some perspective on the investment home buyers are making when they purchase a home. If you look at the youngest age range, which is 22 to 30 years of age, you'll notice it also is the lowest down payment of all the age groups at 6%. This is primarily due to low down payment loan programs available today, which you're here to learn about. This is also the age range for most first-time home buyers who face the biggest challenge of saving for a down payment. In the other age ranges, you will notice the down payment is often much greater. Oftentimes, a home buyer in this age range has sold a previous home and the proceeds to purchase a new home from the sale of their home. This is one of the many advantages of becoming a homeowner. What really is interesting here is that 57% of home buyers, just like yourself, are putting less than 20% down on a home purchase. So that should be a word of encouragement for you. If you fall into that lowest age range, that's a 6% down payment. And the good news is we're going to talk about how you can even reduce that further. So what is a down payment assistance program? So what it is, a down payment assistance programs help buyers with loans or grants that reduce the amount they need to save for a down payment. Down payment assistance loans or grants can help you make up some of that difference if you're low on savings. Some down payment programs do not require that you pay back the loan. So I will repeat that. That's really exciting. There are programs available where it is actually considered a grant or a gift. Down payment assistance programs can help you buy a home sooner. It prevents you from having to save that 10, 20% down payment. Who qualifies? First-time home buyers, most of the programs require that you're a first-time home buyer. However, if you have not owned a property in the last 3 to 5 years, depending on the program, you're still considered a first-time home buyer. So keep that in mind. The home will need to be a primary residence, meaning you will live in the property. The home is within local purchase price limits. The down payment assistance program is used in conjunction with an approved mortgage program. You work with an approved mortgage lender, and oftentimes it requires home buyer education as well. All right. So you ask, what's the difference between a mortgage loan and down payment assistance? They are two distinct programs. A mortgage loan, as we just explained, is a loan given by a bank, mortgage company, or other financial institution for the purchase of a residence. Plain and simple. A home mortgage will have either a fixed or floating interest rate and have a lifespan of anywhere from 3 to 30 years. The lender who extends the home mortgage retains the title to the property, which it gives back to the borrower when the mortgage is paid in full. Typically, a home mortgage is in the first lien position, which is released when the mortgage is paid in full. Now, let's compare that to a down payment assistance program. Funds are contributed towards your down payment, possibly covering all of the down payment. Down payment assistance is obtained in conjunction with a home mortgage. Your lender will coordinate with the agency that you are applying with for the down payment assistance. The down payment assistance may create a second loan that requires repayment. This will create a second lien on the home. Each down payment assistance program may have varying homebuyer criteria to qualify for the assistance. Before we review the types of down payment assistance programs, I want to stress that each homebuyer is unique and has a unique set of circumstances. Your first step in this process is to speak with a trusted loan officer who will detail the options available to you given your circumstances. So these are the main types of assistance programs. You have grants. Grants are gifted money that never has to be repaid. So that's the optimal program. However, there are some restrictions. And then there's a loan. A second mortgage, it's considered a second mortgage that is paid monthly along with your primary mortgage. There's deferred loans. And this is actually very common and quite a wonderful program. Second mortgages, it creates a second mortgage with deferred payments that only have to be paid when you move, sell, or refinance. So in other words, even though it is a loan on your property, you're not having to make payments on that loan. And then there's restrictions involved with that. And then lastly, there are forgivable loans. Second mortgages, these are second mortgages that are forgiven over a set number of years. Oftentimes that's anywhere between 5 to 15 years. The only time you would need to repay this type of down payment assistance is if you move, sell, or refinance your property before those number of years has expired. So all great information. So how do I learn about down payment assistance programs? I've listed 4 agencies that we work with at US Bank. Nearly every American state, county, and local municipality offers some type of homebuyer program that provides down payment assistance and closing costs, or a combination of both. Many are restricted to buyers who meet certain income levels, and some are restricted to first-time home buyers. While not all of these programs can eliminate the need for a down payment, some offer grants, as we just learned, or interest-free loans that cover some or all of the down payment. So what you see in front of you are the California and local nonprofits that US Bank works with, and then I'll talk about how to do your own research. But the City of Los Angeles has a low purchase assistance program, and that is through the City of Los Angeles. And there's also 2 agencies through the state of California, and one is the Golden State Finance Authority, and they have a down payment assistance program. The other one is the California Housing Finance Agency, which is also known as Cal HFA. And this allows qualified buyers to layer other down payments, assistance, loans, or grants to maximize affordability. So that's what makes it rather unique, is it allows a variety of programs to be combined. And there's also the Neighborhood Partnership Housing Services opportunity, which is also a down payment assistance programs. And of course, our wonderful host for this event, VCCDC, can also assist you in offering information on any programs that they have access to. And then lastly, I do want to emphasize that if you research online, and I know I would, we have all of that information exists on the web, but if you're going to research online, make sure you are on a nonprofit site. You can distinguish this by the actual web address, and it should have a .gov or a .org in the address itself. Of course, your loan officer will review the assistance programs that might fit your circumstances as well. Now, as we learned, when you have a down payment assistance program, you also are going to have a mortgage loan. And the combination of the two is what is required when you're using a down payment assistance program. So I'm going to review some of your options for your home loan. And I'll start by introducing a program offered exclusively at US Bank. We call the program American Dream. And American Dream has a down payment as low as 3%. And it also offers assistance towards the down payment or closing costs. And that is based on the purchase price of your property. And it's anywhere from $5,500 to $10,000. So that can actually help you with the down payment, closing costs, and even possibly repairs or minor improvements for the home. Additional programs that we offer at US Bank are Home Possible. Home Possible is a Freddie Mac mortgage that offers a down payment as low as 3% and has more options and credit flexibilities than ever before to help low-income borrowers attain the dream of owning a home. There's also the Fannie Mae product called Home Ready. Mortgage program. This is a mortgage program that helps lenders serve today's market of credit-worthy, low and moderate income borrowers and encourage the financing of homes in designated low-income and minority communities. Home Ready is also a down payment as low as 3% to assist home buyers who may not have a large down payment. The next program is FHA, which is a Federal Housing Authority loan that is insured by the government and issued by a bank or other lender that is approved with the agency. FHA loans are a lower minimum down payment. Typically, it's 3.5%. And that is wonderful for a low down payment. But what's really great about the FHA program is it does allow for lower credit scores, and it also allows for income limits to be a little bit lower than what would normally be required. So the FHA loan can be a good solution in some circumstances. And then there's also a VA loan is a mortgage loan available through the U.S. Department of Veterans Affairs. With VA loans, veterans, service members, and their surviving spouses can purchase homes with little or no money down. It's an amazing program That was enacted by Congress many years ago, and it offers the ability of a veteran, their spouse or family member, to be able to purchase a home with no money down. And that's a wonderful thing. So, and then lastly, there is the U.S. Department of Agriculture, USDA, Home Loan Program offers mortgages to low-income residents of rural areas who cannot otherwise obtain a conventional mortgage. If you live in a rural area and can't qualify for a conventional loan, you may qualify for a USDA loan. And all of that is a lot of information I filled your head with, and we don't expect you to memorize any of it. But the bottom line is, and the takeaway is, that before considering how much money you need for a down payment and whether you'll need that down payment assistance to help you with that down payment, start the process of getting pre-approved for your mortgage. That way you know how much house you can afford, and you'll know how much you need to save to prepare yourself for home ownership. It's possible to qualify for a mortgage from conventional lenders with a down payment as low as 3%. And if you need help coming up with an even smaller down payment, then that's the time to consider the down payment assistance programs. And they are a huge benefit and help to home buyers that are struggling to come up with a larger down payment. As mentioned, your first step in preparing for home ownership is to create an action plan based on your unique circumstances. Work with your local nonprofit housing agencies to further your home buyer education. Speak with a trusted loan officer to create a roadmap to prepare your financial profile to meet qualifications for a home mortgage. And lastly, I will say that in the 20 years experience that I have in home mortgage, I really enjoy working with first-time home buyers because education is all you need with those first consultations. And it's my job and the job of every loan officer to explain to you what all your options are, what some of the challenges may be given your circumstances, and then how to plan so that in the future you can obtain that dream of home ownership. So with that, congratulations on being here today to further your education by attending the Ventura County Community Development Homebuyer Fair. Enjoy.
Thank you so much, Julie, for that great information. We're now going to move on to talk about VCCDC. Our goal here, making your home ownership dreams a reality, home buying assistance programs. We're going to talk about all that. So my name is Ricardo Arosemena. I've been with VCCDC since 2019, but I've been doing lending and helping families for over 20 years. I especially focused on down payment assistance, and we work here in Ventura, Santa Barbara, Kern, and LA counties. Like I said, I've been around for a long time. I understand the programs, and I can answer questions if they come up, and hopefully we'll get a chance to talk. So let me tell you about VCCDC. VCCDC is a 501(c) nonprofit organization founded in 2001 by Rodney Fernandez and Bertha Garcia. Our mission is to strengthen and sustain vibrant communities by empowering individuals and families to build wealth through education, home ownership, with a primary focus on serving low to moderate income clients. And hopefully we'll get a chance to serve you. Now, along the way, while we're talking, there's going to be certain things that we're going to be talking about, certain terms that I want to kind of explain to you that kind of help you understand kind of where we're coming from. We help primarily first-time home buyers, even though as a lender, I help anybody that is seeking, home ownership. A first-time home buyer is somebody that is, first and foremost, has never owned a home. And that's pretty obvious. But you could be somebody that maybe owned a home 4 or 5 years ago, sold it, and now you've been renting for the last few years. So you would still be considered a first-time homeowner if at least 3 years had passed by. Now, if you were also a divorced spouse, somebody that was displaced as a term of a divorce, then you could definitely still be considered a first-time homebuyer. Now, we primarily here help low and moderate income families. And low income is a very specific number, and that's established every year. What we're looking at is the area median income in the county that you happen to be buying in. And we help low income, which is 80% of that area median income. And we also help moderate income, which is up to 120% of that. We work in 4 counties: Ventura County, Kern County, Los Angeles County, and Santa Barbara County. So if you are somebody that's looking to buy in any one of these 4 counties, we have funds, we have down payment assistance programs that could assist you. Another term that you're going to be hearing is household size. I'm going to be asking you how many people are going to occupy the property, because the income limit is based on how many individuals are going to be living in that household. So example is a husband and wife and 3 kids. That's a household size of 5. And so there's an income limit that's already been established for somebody that's a 5-person household. So let's look at some of the programs that we have to offer. WISH is a forgivable grant. This is a fund that we just got access to again. Usually we have this around April of every year. It's up to $22,000. And the way the program works is that for every $1 that you provide out of your own assets, we will match it up to $4, up to a maximum of $22,000. You can use this money for your down payment and for closing costs. And every year that you live in the house, the first 5 years, every year it's forgiven 20%. So at the end of that 5th year, it is completely forgiven. You're not going to be owing anything on that. So this is a great program because it not only you end up basically getting the money for free if you're eligible. It helps build wealth in the property that you're buying, because it ends up being part of the down payment that you use for your purchase. And we have plenty of funds right now and hope to have some for the next several months. Now, the other program that we've got is called Cal Home. This is a deferred loan program, which is different than the grant program. Deferred means that there's no monthly housing payment for this particular program. It's up to $40,000 that's available right now, and it's deferred for 30 years. So you wouldn't have a payment on this thing for the entire term of whatever your first mortgage is. So that's why it's typically 30 years. It does come with simple interest that accrues annually on that $40,000. You can use this money for down payment and closing costs. It does require, though, that you have at least 1% of your own money coming into out of your own pocket coming in for your purchase. It is not driven by your credit score. You do not have to have a specific credit score to be able to be eligible for this program, but you have to be able to obtain financing. So you have to be able to qualify for a home loan in order to be able to then be eligible for the funds that we have to offer. Like a lot of programs out there, especially down payment assistance, there's a maximum debt to income ratio of 45%. And what that kind of means is that whatever your qualifying housing payment is, plus your debt, if you have a car payment, credit cards, all of that, it can't be more than 45% of your monthly income. The program definitely wants you to have enough money left over to pay all the other overhead, gas, food, electricity, all of those kinds of things. And this program is available for low-income families, which is the 80% of the AMI in every county, in the counties of Ventura, LA, Santa Barbara, and Kern County. Now, another program that's also under the umbrella of the Cal Home program is called our From Here Forward program. It's a disaster relief program, and it's up to $100,000 in assistance. Just like Cal Home, it's deferred for 30 years. It does come with 3% simple interest. Okay, you can use this money for down payment and closing costs. So this is a pretty substantial amount of money that you can use for down payment. It is not driven by your credit score. You have to be able to qualify for financing, and obviously you have to be eligible for this program. Maximum debt ratios are 45%, just like the Cal Home loan. And this is available for moderate income families, which is 120% of the area median income. And the disaster that we're talking about are the Thomas and the Woolsey fires that occurred back in 2017, 2018. If you were somebody that was financially affected by those, then talk to us. Um, there is a portion available for low-income families also if you are affected by the fires. As you can see below, there's the income limits that we've now gotten for this year, 2022, and it goes from a family of 1 up to a household of 8. There's also another grant program that's available right now. It's called Hope to Home. It's for Ventura County only. This is a forgivable grant. It's up to $23,000, and it's forgiven after 5 years. You have to be low income, which is 80% of the area median income, as we've talked about, but it's only available in any areas in Ventura County that are considered unincorporated. That's kind of like outside of the cities that are part of Ventura County. Or specifically, if you are looking at properties and you find something in Port Hueneme, Santa Paula, Fillmore, Ojai, Moore Park, that doesn't have to be unincorporated, but just those specific cities. This is a great program also. Now, this is kind of a map, a county map that has the different cities in there. Here's Ojai, Santa Paula, Fillmore, Moore Park. You see the cities in there. All these gray areas are what is considered unincorporated. So there's a lot of area in Ventura County that would be considered unincorporated. So you don't necessarily have to buy in one of those 5 cities. You definitely have to buy in an unincorporated area of the county of Ventura. Now, there's a similar named program in Bakersfield. There's a Hope to Home program if you happen to be somebody that is looking to buy something in Bakersfield. Now, this is specifically for the city limits of Bakersfield as opposed to the county limits. But this is a program that's also $23,000, but this is a deferred loan. It's not a grant. Okay, it's good for 80% of the AMI in Kern County. So obviously, if you are you have to meet the income eligibility in Bakersfield, which is Kern County, in order to be eligible for this program. And you have to buy anywhere in the city limits of Bakersfield. And you're going to see a map very similar here. It's a map that shows Bakersfield and some of the surrounding cities, but you got to be very specific. It has to be in city limits, not county. Everything here that's in yellow is considered county, and everything in blue is considered city. So there's quite a bit of area, but one thing is if you happen to be looking at a property in Bakersfield and you are eligible for our programs, we definitely want to see the address because we need to be able to determine that it's within the city limits of Bakersfield. Now, as I mentioned before, we work in 4 counties, okay? And there's Ventura County, Kern County, Santa Barbara County, and LA County. And you can see the income limits vary per county. Right now, the highest is going to be Santa Barbara County. It's probably a more expensive area to buy, followed by Ventura County. And then LA County, the income limits are a little bit lower. And of course, the lowest is going to be Ventura County. So definitely talk to us if you happen to be somebody that lives in Kern County or looking to buy in Bakersfield or in Santa Barbara or in LA County. We can help you in any one of those 4 counties. Now, another program that we use is CalHFA, which stands for the California Housing Finance Agency. CalHFA is primarily a program we use for families that are over low-income families that aren't eligible for our Cal Home Wish grant. Then there's this program within the state of California that's been around for a long time. I've been doing CalHFA loans for a long, long time, and they basically have 2 programs. They're both deferred loans. They don't provide grants, but they provide deferred loans. And the first program, which is My Home, it covers your minimum required down payment depending on the program that you're using. So if you're doing an FHA loan, which requires 3.5%, or a conventional requires 3%, then you can get that in a deferred loan from CalHFA through this program called My Home Assistance. It comes with 1% simple interest, so that accrues annually, similar to the Cal Home grant, which is 3%. Great program. Then there's Cal Plus, which is an additional deferred loan that CalHFA offers that you can use for closing costs. And so it gives you the option of either a 2 or up to 3% of whatever your first mortgage loan is that you can use for closing costs. This is a great program. I've done CalHFAs for a long time, helped many, many families. Now, how do these programs work? How can we do them together? Well, we can stack them. We can basically bundle these programs together. It's not as if you're only eligible for one of the programs. If you're eligible, if you're low income if you're a first-time home buyer, then we've done transactions where you get not only the Cal Home deferred loan, you get the $22,000 wish grant. We've also even bundled the Hope to Home grant with that. And some of the other programs that are available to some of the city programs, like the city of Oxnard, for instance, we've put together some of our funds with some of their funds for even a larger down payment. So it all depends on how the numbers look at. So definitely give us a call and talk to us. We want to be able to help you as much as possible. We will do everything to make it possible for you to be able to attain home ownership right now in, these counties where things are not inexpensive. Things are very expensive out here. So again, definitely go to our booth, so you can talk to us, and you can speak with some of the loan officers. There's a lot of resources there for you. You can get information on the AMI in the county that you happen to be interested in, down payment programs. We're here to help.